Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex quick look as we head into the new trading week. For the sterling versus US dollar, what levels are in play, where are the targets, what are the risks, and support and resistance levels. I'll go through it all in this video, so let's get started. If I take a look at the 4-hour chart, and I were to take a look at the last 3 weeks of trading, the price action has been up and down, up and down, up and down. On the downside, we have support near this swing area between 1.28449 and 1.28719. The low price in trading this week actually moved up below that level, but this was after the U.S. election, so we had increased momentum. We should have, when we broke below that level, we should have gone lower, but we found early support buyers against the 200-day moving average that was looming below, and we rotated back to the upside. On the top side, the high prices this week stalled within this swing area up through here, which goes back in time through here, and here, so on and so forth, where we had a number of different swing lows and swing highs. So that area came between 130.43 and 130.58, and once again we found resistance against that level before the U.S. election. Then started its rotation all the way to the downside. We saw a rebound in trading yesterday and a rotation back to the downside in trading here today. The in between this extreme and this extreme sits the 100-day moving average. That level comes in at 1.2991. We also have the 38.2% retracement of the move up from the April low to the high price right here. That level comes in right at the 130 level, another key level. And then we have the 100 bar moving average on the 4-hour chart at 1.29677. As you can see in trading yesterday, the price did move above the 130 level, also moved above the 100-day moving average. Should have sent the price higher, but didn't rotate it back to the downside. But nevertheless, this area right through here is going to be a key level going into next week's trading. I'll earmark this whole area between 129.67 and 129.999. Let's call it 130. So that's 33 pips as the key barometer for both the buyers and sellers. If we stay below it, the bias is more to the downside. If we move above it, the bias tilts more to the upside. On the downside, this swing area down between 128, 1.2844 and 1.2871. Or 72, inclusive of the 50% retracement level, are the levels that are going to need to go below. And now if we get below those levels, we look toward the 200-day moving average. That 200-day moving average comes in at 1.2815. Get below those levels, and it opens the door for further downside momentum in the sterling versus US dollar. Look toward this swing area here in the 61.8% retracement as other targets on the downside. Conversely, if we start to move back above this red box, these areas, this cluster of areas, and we move above the 130 level, then we'll look toward the high of this swing area, and then the falling 200 bar moving average on the 4-hour chart. Those would be the next key targets on the top side. If we get above those levels, and we look toward this swing area here between the 131, 1.3114 and 1.3144 level. Staying within the 3-week trading range. Lots of ups and downs in trading this week. Below the 100-day moving average, below the 100 bar moving average on the 4-hour chart, keeps the sellers more in control, keeps the bias in the direction of the sellers. Support 128.45. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.